Hello, hello, good morning. Good morning. Welcome to another ES Futures trading stream. We have something here that looks like it's going to be a really interesting week today. The current contract, if I talk the market, about in terms of contracts, this one doesn't have too much life on it. A couple of weeks, maybe a couple of weeks more before it starts to winding down. And it isn't, if you have been observing this market in terms of contract, right? There are certain things that you see. Let me see if I can add that to this chart. Show contract events. Yeah. All right. These green lines here are where the contract opens. When a new one start to trade, basically heavy trade, but it actually starts a little bit before, right? I believe the 13, where was it? I guess the 16 was, I don't remember. I guess the heavy trade started here, for example, something like that. And you can see, this is March contract, where it started and where it is now. Right? It just couldn't have any kind of advance. It is rather right now, this moment, it's a little bit lower, right? So all of this buying that has been coming, or hedging, or expectation were not met, have not been met. That's one thing, right? And as the contract, because these contracts actually have to be executed, right? All these contracts every single one has to be executed, and each one is worth 50 times the index. In this case, if I have let's round it out to 6,000. So 50 times that is 300,000 per contract in stocks, right? In the 500 stocks that this index is based on. And if you start to see, you look backwards and see what was happening during this time, as long, I don't remember for how long now, but most of this has been basically trading money, small short-term trading going on here. And what traders don't want to execute, small traders have no intentions to execute any kind of any of these contracts. So if they see the expiration is getting closer and they are still in possession of this contract and have any kind of advance, the odds are that they are going to be, they are going to go, they are going to liquidate. Right? They are closer position. Even further, if they start to break, they may take a loss, right? Or start to hedge, or do whatever, right? But they have to do something. That's one thing, right, that I have here. These dates here these white things are end of the month contracts, right? We have seen something here, right? You can see something here. Last year, end of the month. Yeah, end of the month. I have not highlighted all of them, did I? Yeah, no. These are end of the month. And can you see the trend? Higher. Kind of a little bit slow, a little pullback here. Higher. And why I highlight this? Because I want to remember what happened here. Because we are getting closer to something really interesting here. We are coming to a date, right? To this end of the month, to the 28th, that falls on Friday. There is a lot of interest here. Now, guess what traders are going to be doing when they see this thing happening? Higher. Okay, there's a pullback here. Well, this is good. It's going to rip to the upside. Huh? There's a lot of interest here now. Involved. I believe, right? Aiming for the market to take this high. But what can happen if that doesn't happen? That's one interesting thing. That is one thing. Jim has put something interesting. I always check this end of the month. I try to see the end of the month, right? That's part of trade, right? This in the end of the month, for example, falls on Monday. This falls on Wednesday. This one, we're talking about May, again, falls on Friday. So this is something to keep in mind. May. Another one that falls on Friday. This is August. October. November also falls on Friday. And I think I can consider this one as well. Right? And there's one side of the trade when you are buying calls. Somebody has to take the other side, right? And usually what he explains in that, it is sense to him that I have learned this, right? Retail has a tendency to buy these options, whatever option it is. Retail, if the trend is higher, they buy options that are going higher. And somebody has to take the other side. In this case, it's the market makers, right, or the dealers. He calls the dealers in his short video. Other people call them market makers, right? Most people call them market makers. But when you do that, from the perspective of the dealer or the market maker, you have to hedge those things. You just cannot buy or sell or meet the other side and just stay like that, right? Because if the market moves in the direction of the trade or the position, you're going to lose, they're going to lose. So what they do is they hedge. Right? But what happens when the market moves drastically in the opposite direction? Right? Pay attention. Look at, I'm not talking anything about what has happened here, what's happening here. I'm just talking about that specific condition, right, or activity in this market. And that's only one thing. Right? Not everything evolves around that. There's a lot of other things, but this is just one thing. Right? What happened in that position in this market? If you have take the other side of the trade, instead of staying here around or whatever, it starts to break. They will have a huge loss, and to prevent that, right, or even to aim and have something out of that, you will need to hedge your position. And hedging that position will add pressure to the movement. That is what he explains in his video. And this, but the dynamics of that, at the end, everything's about market dynamics, and that the dynamic is something that many people don't understand and don't even know. Some may not even care about that. But if you are going to trade this market, that's something that you may consider. You must have at least have some idea what can happen. Because most traders are just momentum traders, retail trading. They see a market breaking, okay, we're going to sell. Look at this. Liquidation here, liquidation here. And the last thing we talked here in Discord, where the market was doing that, I believe was, for example, I guess it's something that I say is I thought that this trade was down here, right? But looking at the profile, what happened here, I was checking or aiming at the correction of this exponentially weak level here. I thought that was it, but boy, I was wrong, right? Well, but as this comes, as this happens, I start to asking myself, right? So the next thing, what is next? Is this a trending day? If that's the case, this is a pit stop, right? Just a pit stop. Well, I guess I mentioned something about okay, you're right there. Right? But it is from the short-term perspective, it's really hard to see these things, and to see these things in context, right? What can happen here? What was happening every time the market did this? Every single time in the past, the market just shoot its way back higher. How this time can be different? Why? Right? We were talking about this real time, right? Live. What happened? The mistakes I made. The realization, the mistake I made when I have an all-time high, kind of like a up here or higher than this actually. Why was that a mistake? And when I realized that, and how I faced the next phase, right? Next thing, and to close the week, I closed with something here. The same thing that happened here during the intraday. This is in the short time frame, right? The same thing now. Look at this happening. in the daily time frame, right? We have multiple periods low, the market just being bought from those levels, or buying dying, or selling dying, or whatever. No, but now you have a bigger time frame here. How many lows we have here? And we also talk about these CPI days that were really bad, man. And the market just ignored what happened here, these hot numbers here. The market just ignored the number and rally higher. Right? And sometimes the reaction doesn't happen immediately. Right? Because if you are going to sell something, you're going to readjust your position. And this is something also that has to be seen in context, right? Killing a market is not good it's not good for anyone. Because if your market rises so fast or it breaks so fast, you can't do more. You cannot sell more. I'm talking about big money, right? Because the more you sell, the deeper is going to, your position is going to be, the spread that you have is going to be really big. And that's something you don't want. Again, I'm not talking from my point of view. I'm taking the point of view of the bigger participant of the market. I am nobody in this market. Retail means nothing here, basically. Right. Now, for the past weeks, and notice how the dynamics of this happen. For the past weeks, every break the market had was met with rally, break, rally, break, rally, break, rally, break, rally, right? But, and I remember this, I was talking to Hale like about a month ago, maybe even more than that. When he talks about, something that you observe, right? This is something that you observe when trading. But because the job is basically that, well, that's the job, but that's what a trader do. The trader watches and observes and records. Every rally was being met with selling. At the time, I have this long bias that this market is obsessed with making a new high for the year, right? For this year, which has not been at the time. But every attempt, as we can see here, was being made with selling. And this comes from, as I said, more than a month ago, 4, 5, 6 weeks ago. And he asks something really interesting, right? When traders are going to realize that, right? When traders are going to realize that they are selling, their attempts to buy the market is being met with heavy selling. Right? And the answer was kind of comedic answer. Was, by the time the traders, certain traders, realize that their attempts to buy the market is being met with selling, this market probably will be really, really, really low. Would have moved a long distance to the downside. Because that's what markets do. Markets put you to sleep, build a habit, and by the time you realize you're on the wrong side, it's too late already. That's how it works. Well, those are the dynamics of the market, and that's why this business is super hard, right? Trying to remain neutral. observant on the market, make informed decisions is really hard. Biases play a big role here in this market. I am not biased to the upside anymore. That has ended last week, right when the market made those new highs. I am not to the downside. Okay. A lot of times when we have this kind of breaks, and this was very emotional. 1, 2, 3, 4, 5 distributions. That's really very emotional reaction. Some rebalancing is expected here. Again, I don't like that word. Right? I don't like it, but usually there is some rebalancing here that happens, right? Which means sideways trading, and then finding direction after that. If the pressure remains to the downside, just keeps going lower, and there is a bounce. Or if there is a change, it keeps coming back to make new highs. And we have pointed out as well that this is nothing in this market, right? We see no excess here in these highs. There is a 5% pullback that is down here. If the market does this pullback, there's a long distance from these highs, right? It's a long distance from these highs. But it is actually very little. All right. A 5% pullback after making 25% the previous year is actually, you call it, right? Insignificant. Or not insignificant, but between the expectation of a normal market. I had a 5% advance here, 5% pullback here from these highs here. Okay. Can we have maybe a year where the market moves in this range? Who knows? I am not in the business of predicting what the market is going to do. Also, another observation is that the 50 is not holding anymore. The 50 is not holding anymore. Now, there is a lot of things that's happening now in the 100. We have this buy from the 100. How long does having the market at this level is very questionable and low. Right? Notice what's happened with the 50. Is this going to cross the 50? And why I pay attention to this? Because since the market has been dominated by short-term traders, this is something that they watch. Right? This may go higher and this may start going lower. If this keeps going lower, this keeps going higher, the 200, guess what can happen? If I check the SPY here, this is buying from the 50, can you see? Which is very questionable, which is a sign that who is here behind. What is the dominant force in this market? In the 5 minutes charts, and this is very interesting here. These levels here, I guess I closed last week talking about this potential Nasdaq movement towards the 21,300. Right? and doing something very similar to what this ES has done on Friday, right? Some ultimate destination. What is below? There's another one here, the 58, 59, 40. Coincide with 59, 50, right? Another 50 points down to the downside here. Another one. And these are from the past. What happened here, I don't remember, but I just keep those ones there. Now, let's check market profile. And this is for today. This is for today now. Okay. This is a very typical high here. Right? When I saw this, because about this market is going. I say this market. This is just a short pullback what we have here. Really short. I didn't expect the movement that came after that. It was just so big, man. Market is very short. Notice where shadow is down here. All of this inventory is long. All the overnight is long. Opening up here, the market closest two distributions, still leaves three. There may be this area here can be something to watch. This one here, because it's a good area. It happened during the overnight. It's a good area to measure risk, right? If you got a long here, for example, okay, for whatever reason you are long, okay, this is going to keep going higher, going to the moon. There's not too much distance. The market has to travel for me to know that this is wrong, right? If the market comes back below this one, the trade is not working. I am wrong. My assumption is wrong. Same goes to the opposite side. If I am sure here the market takes this high, I'm out. Not thinking twice. Right? Maybe it can go 1, 2 ticks and then keep going lower and then reverse and go all the way down to here. But that was not the assumption or the reason why I take the trade. I take a trade is have that H high as a reference, right? As a deal breaker, I want to call it, if I am going to call it. I think this is in the very short term for something here. I don't expect, this is the thing, right? Closing this way, there is a lot of inventory here, right? A lot of shorts that close here, or hedge or something. Right? Look at what's happened with Nasdaq. Same thing in Nasdaq too. Notice shadow is. I guess Nasdaq is even weaker. Right? It's right at shadow, the lowest at shadow. The market opened with a gap. It has this settle on Friday, close it here, and open kind of like around up here. It worked its way down, which for me is something that I think that's a really important piece of information. Right? It's attempt, but I don't expect a huge movement today. Really. I want to see what happens, how this market reacts to the break that we have on Friday, relative to what was happening in the previous weeks. Right. So that's the thing here for me. The risk that the short may have if what happened Friday was just a continuation of what was happening before. If the market is still acting in the same way, if the selling retraces, this market can come back a long distance today. I'm not saying that's going to happen, but that's something that I want to observe if it happens. Downside continuation has these lows, around the 6,000 here. In my monthly charts, I have this go no go level at the 59.25. Oh, this is a mini go no go. There's another one, the bigger one down here. This 59.25 where is 59.25? Oh, actually, that's the gap. That's one gap here. Oh, it's this one. I don't know why I have it 25. Go, no go. 59.25. I guess I don't know why they have that. Obviously, there's nothing there. There's nothing in that 59.25. That's not a reference. And that's why it's very important to do your homework, right? 59.25. Oh, I have this one here. This. Yeah, it was during this month. This one, December, February, January and February low, right? It didn't take this. It didn't come back to this because coming back in here during this month could have had some pressure to the downside, to the opposite side of this range, which is the go no go level. This one here. This is kind of like a mini go no go, and this is the reason here. That's why I have it here. The weekly time frame, not much here. There's not much in here. In the weekly time frame, we have maybe a testing. Right now, this is not good, but something that we talk about is how in the weekly time frame, the one time frame higher has not ended in the weekly time frame, even though this is huge, right? And that for me is also kind of like a nuance here, right? Because it just could have done on Friday, right? Just could have it is just one tick there, one tick here, right? The same way how this high is only 3 ticks higher. I think that's what it is, right? 3 ticks higher here. This one is just stopped at 1 tick from reaching this low, and that is right. That is a breakout failure. Breakout comes back in balance, reaches the opposite side of the range, and again we are inside a balance range here, for which we apply balance guidelines. The same thing can happen: breakout and failure, right? Or it can be some rebalancing here and downside continuation. Don't know what's going to happen. I don't know, really. And what I try to do is not to have any kind of biases here. For Nasdaq, I wasn't watching Nasdaq really, but I guess this is worth to have here. Because it's so thin. this, what I'm highlighting here is the low of the single prints and the high the single prints, because that's what the market can aim. Yes, for example, this is not that much here. There could be a good area here to do something. I think this one is something, but it's huge, man. This is, how many points? Like 200 points here. I mean, the risk is huge there. Yeah, unfortunately, Nasdaq has a wide ranges here in these distributions here. I don't trade Nasdaq. I don't know the nuances of this market. Right? But I don't like this low here to begin with, right? Usually these two markets all behave the same. Probably this open also higher, and then sell from that. I was bought from sell. All right. There are still 15 minutes for the opening. Oh, the next thing is we have PCE on Friday. I don't think that number is going to come good. And the other thing is we have Nvidia on Wednesday. I think this is the first week in the year that it has 5 days on it without a holiday. And the next holiday I think is July 4th, 4th July. We may have something here now. Now, there can be some opportunities, I don't know which side. Okay. The daily is trending lower. The weekly is not. The weekly is quite the opposite. The weekly is trending higher, actually, believe it or not. And the monthly also is almost is in range and has a non-excess high. Talking about the ES. Yeah, talking about the ES. We have a really nice volume on Friday. That's one of the things I am planning to observe today. If this is what I am talking about. Let me see if I can pull this out. No, I can't. This one. Notice how Friday, for example, notice these lows on Friday. These lows are higher than the past 10 days. I only have 10 days here. I don't have more. Right? If this opens, and check this out. This is really very interesting here. Notice how the fish periods lower than the previous day, and suddenly, boom, we have there's change in this market, right? After how many periods? 1, 2, 3, 4, 5, 6, 7 periods. That is FG period, right? Here is when volume starts to really increase, right? And this is when you say, right, when you see the example, a really practical example here, that sometimes it's better to be a little bit late than too early, right? You may not have nothing here. You had one opportunity in this area here, yeah? And the other one comes in F here. I think any part of F would be here. Because you have the 6100. 6100 is, all those round numbers are in the way of any kind of movement. Next one, 5930. What do we have at 5930? Look at that. Look at that. Not just big blocks, but heavy volume down at the area. Big blocks here. Big blocks here. Doesn't mean, I'm not saying that this is going to break, but I just try to remember, right? Talk about these things to remember myself what is out there. Alright guys, I wish you have a wonderful trading day. If you have any questions, please let me know. Otherwise, I will be calling the stream out. I will call the stream for today. And I will wish you a wonderful trading day today. Stay safe. See you.